Hi, I'm Matthew and welcome to another video. Hopefully you've already subscribed. If you haven't, you should do that right now. Let's get straight into it. Let's talk about the hottest topic in the housing market right now. Will there be a crash in 2021? Quite frankly, no one knows. I didn't get a crystal ball for Christmas, and just like everyone else claiming to have the answer to this, the best I can do for you is to give you my best educated guess. So straight off the bat, let me give you a little insight into my personal circumstances and whether they could be a reflection on the wider economy. Now, as a landlord with 30 residential rental properties, as of yet I've been very fortunate in that the pandemic isn't really affecting my tenants' ability to pay their rent. I've got 29 out of the 30 tenants all paying their rent on time and in full. One tenant was made redundant in April of 2020. He's now back in work, and we have arranged for a repayment plan. I would consider my properties to be a good reflection of the average UK household. The tenants are all sort of good, hard-working, average people earning an average wage. If this is a reflection of the wider economy right now, then I can only really conclude two things. One is that the government initiatives, they're all working and we're basically avoiding the worst of it, or that the worst of it is yet to come. Right now I am swaying towards that the worst is yet to come. So with that in mind, yes, I do think there is something of a housing market crash to come in 2021. Now, when we use the term housing market crash, this historically refers to around a 20% drop in prices. That was the case back in the early 90s, and exactly the same sort of figures in 2007 and 2008. Let's quickly put a 20% drop in prices into some perspective. Figures released just this week, so the first week of January, suggests that year on year house prices are up around 6-7%. Now, I appreciate that 6-7% is a long way off 20%. However, that's 1 year's growth, so that does offer some comfort, I feel, in that a recovery in prices could be relatively quick. Also, if we were to see a drop of 20% in prices, that would take us back to figures we saw in late 2015. Now, the downside to the strong 6% growth we saw last year is that it was fueled somewhat artificially. There has been a lot of pent-up demand in the market. Obviously, lockdown happened and then the market reopened again in the summer. Also, the stamp duty holiday that's in place right now is due to end at the end of March, beginning of April. So I feel a lot of households have been panic buying almost. A panic buying mentality is never a good thing for the housing market. It possibly has forced households to overstretch themselves, not wanting to miss out on the stamp duty holiday and simply just wanting to get moved in this last year. Overstretching shouldn't be too much of an issue right now. Mortgage rates and the cost of borrowing historically have never been so low, so that monthly payment is more affordable in most cases than it's ever been. Now, of course, this is only the case if household incomes aren't affected, and this is where I feel problems are going to arise. The pandemic has quite literally decimated some sectors. Let's take hospitality and retail, for example. When, if at all, will these ever get back to pre-pandemic levels? There have already been thousands of job losses in these sectors, with many more thousands surely about to filter through in the coming months, right around the time when the stamp duty holiday is due to end at the end of March, beginning of April. Now, I'm not suggesting that all the job losses in hospitality and retail will filter through and result in those individuals defaulting on their mortgages and single-handedly crashing the housing market. I'm sure a lot of these households will be fine. However, what does concern me is the ripple effect of these job losses and people's current lockdown mentality filtering through into the local economies. Let's take the capital, for example. Not only is there bound to be a lot more unemployment filtering through in the coming months, but there just isn't the demand or even the need to be in the heart of London right now. More and more people are enjoying the option of working from home, but working from home in a pokey, confined space that a lot of Londoners have to endure has led to something of a mass exodus from the capital. Recent figures suggest that in excess of 70,000 people have moved away from the capital in search of a more spacious, rural environment to live in. If more and more people move away from the big cities, then surely this has got to have some effect on the supply and demand ratio in those areas. Property and houses can't just sit empty, they have an ongoing cost, and if there isn't an abundance of new buyers coming into the market desiring to live in these what once were vibrant, attractive spaces but just aren't right now, then prices of property need to be more realistic. A property will only sell at the right price. So where the supply and demand ratio has had an effect on prices falling in some areas, surely the opposite can be said for other areas. Those 70,000 Londoners have had to move somewhere. So it's no surprise that other areas have seen some very strong growth this last year. And I do feel that some areas can hang on to gains made by simply ticking the boxes of what households are now looking for with this new lockdown mindset. We can never pin too much emphasis on supply and demand bolstering the housing market. If that were the case, then why throughout recent history have we still experienced two housing market crashes? As a nation, the UK has always been lousy at managing the supply of new housing. This has always been the case, and yet we still had the crash in the 90s and in 2007 and 2008. If this is a case of history repeating itself, then recent unemployment forecasts have us right on track for mimicking what happened in the 90s and 2008. Unemployment is predicted to rise in excess of 7% in 2021. That would see more than 2.5 million people out of work. The last time that happened, house prices did fall, and yes, you've guessed it, by 20%. So yes, I do feel there will be some significant corrections in prices. I believe they will be localised and more regional, directly related to unemployment in those areas, and this will vary nationally. Now, with every crisis comes opportunity, so in my next video I am going to share with you where I see there to be some opportunities in the housing market in 2021. Thanks for watching. Hopefully this was of some use to you. If it was, then please like and subscribe, and I'll be back again soon with another video. Thank you.